This is John Bowman here, and I'm the facilitator for the Calgary chapter of the Real Property Investment Networking Group. I'm also an investor agent. When I'm not helping others achieve their investment goals, I'm an active investor who owns and manages multiple investment properties. According to CREA, which is the Canadian Real Estate Association, with COVID-19 restrictions being lifted across Canada, home buyers and sellers have been busy. National home sales and new listings have continued to increase since June, and this part staggered me, with July seeing more home sales across Canada than any other month in the history of the Canadian Real Estate Association's database. So that dates back more than 40 years. These are average price changes compared to a year ago. And of course, in Alberta, you can see we were a little bit lower than some of the other provinces, but we still managed to be up 3.3%. However, the impact of COVID-19 on the economy is not over. There have been more than 100,000 jobs lost since last year, and Calgary's unemployment rate sits at 15%. This is well above the national average of 11%. New listings are easing and is helping to chip away the existing inventory compared to higher levels recorded last year. However, the pace of year-over-year decline has eased as the inventory levels have trended up relative to levels recorded a few months ago. The months of supply has also risen compared to the past few months and now sits at 4 months. This gain has slowed some of the monthly gains on prices. The residential benchmark price in August was $420,800, a little over, essentially $421,000, and is nearly 1% lower than last year's levels. I just wanted to provide a quick note from the legal department, and this is a disclaimer. So myself, as John Bowman, I'm providing real estate services as a realtor. The information in this presentation, or if you visit any one of my websites, are not intended to provide investment advisory services. The real estate investments provided here are as examples only. Real estate in itself, real estate investing, I should say, has inherent risks, including the possibility of loss of principal amount invested. Past performance is not indicative of future results. As with any investment, any decision to invest in real estate should be approached cautiously and after analyzing all possible risk factors. So revenue property investing is the preferred investment strategy for investors who want an additional source of monthly income, along with a slow but steady appreciation in the value of their portfolio. When it comes to residential real estate, there are two main types of properties that one can invest in. Single family, so that's one home under one roof, and multifamily, of course, being multiple homes under one roof. Multifamily properties can come in any size. So when I say multifamily, I'm referring to residential real estate. 4 units or less under one roof. If it's 5+ units, that requires the use of a commercial realtor. I'm not saying that a commercial real estate isn't a good area to invest in, but personally, I don't deal, nor am I licensed to deal in that space. Just wanted to move on to what I'm calling total ROI. So I wanted to, again, explain this graph. And of course, on the left axis, once again, we have dollars. And this time is actually under a different context. So, and now that I look at it, I probably should have added years along that time axis. But as you move from left to right, this is incremental time. So if you can imagine, on the left, year 1, and on the right, 25 years. What I wanted to illustrate here is, with your mortgage, as time passes, you're going to continue to pay that down. Now, with the property value, typically we see year-over-year growth. When we're doing some of our estimates, we'll usually put in a conservative estimate, and it depends on the area, but even at a 2% growth, you're still going to see that property appreciate over time. And if it's a revenue property, you're receiving cash flow over and above that. So the equity in your home will be the difference between the property value and the mortgage amount. So there's a return on your equity pay down. You're also going to see appreciation on the property. So there's the second component. And then that third component is cash flow. So if you combine all of these together, you'll get a total ROI. And we've seen ROIs on some of the properties that I've sold recently for clients that have been in excess of 20% once you stack together all the various components. Properties are going to go up and down, but generally speaking, on the long term, and I think everyone would agree with me, they're going to go up. Now, there might be opportunities where, or times where you buy at the high and sell at the low, and that's unfortunate. But again, generally speaking, you're going to see that trend move from left to right. So I wanted to talk about house flipping for a moment. I like house flipping, but when you flip houses, generally you're dependent on the market going up, or in the very least staying stable. If you get caught in one of these downward trajectories, you can easily see your equity get wiped out. So unlike flipping, buy and hold allows you to wait out the market and sell at the appropriate time when that red line is on the up. Essentially the market highs. So you should also be acquiring properties in these market lows. In my opinion, now is an opportune time to be picking up doors in Calgary. Values are going down, but generally speaking, rents are not. So it's up to you how large you want to build your portfolio or your stack. As discussed, depending on your driver, this can vary. For example, you might want to get to a point where you can choose to work or not to work. Maybe you're okay with one revenue property, and that's okay. It could be that your first property won't be a cash flow home run. Maybe you only make $100 cash flow a month. Maybe you'll just break even, but you'll still have that mortgage pay down and that capital appreciation long term that we're talking about on the previous screen. You can eventually raise rents and get back in the black. The trick to this, though, is that you need to work with the right team to execute this properly. You need to have your bench stacked with the right contractors, the right realtor or realtors, the right property inspectors, bankers, lawyers, and so on. As part of the RP Investment Network, we can connect you with those people. But you can't get there unless you take that first step and buy your first revenue property. You can't start building your portfolio by sitting on the sidelines. I've seen so many want-to-be investors that get stuck in this analysis paralysis. People worry about trying to time the market or about uncertainties in their life, economic ups and downs, etc. Someone asked me, when is the best time to buy a property? And my answer was, if you're a buy and hold investor, the answer is it's always the right time to buy a property. Even if you overpay over time and over multiple properties, you're going to see dollar cost averaging down. This, and if they're cash flowing, some will just cash flow less, but you're still adding doors to your portfolio and growing your passive income. This word passive is what's key. You need to build assets that will generate income for you when you're not working them. Unlike a job, a revenue property will put money in your jeans whether you're there or not. Again, you need to take that first step and pull the trigger on buying your first property. And I just wanted to put a plug out here. Don't forget to add us on social media. You get notified of upcoming events, webinars, and real estate updates. We've got the tags for RP investments, and then below You can reach me at my website, www.investincalgary.com, or tag me on Instagram at John Bauman, BAUMAN _YY. As Warren Buffett once said, the best investment you can make is an investment in yourself. The more you learn, the more you'll earn.